Hi guys, Chris here. I just want to today show you how to get a better entry point on your trades using a lower time frame. I'm at the moment looking at the USD CAD on a daily chart, and I've identified a nice upward trend here. I'd obviously put my fib from A to B, and I can see, if I had a zone, it would be roughly between my 50 and my 61.8. I'd look back for previous support and resistance to see if there was any further resistance or support just below the 61.8. So I'll put my little buy zone there. I'm not actually going to zoom out too far. I can see obviously this section here, which will probably make the zone a little bit too wide anyway. So anyway, I've had, guys, if you see something which is within a couple of pips of your 50 and it hasn't quite touched there, obviously you've got this level of resistance here, so you can just bring it up slightly, and if you did that, then you would see that it does actually touch on there. So then obviously what we've seen here, if you have a look at the stochastic has come down, it's come below here and is pointing back up through the 20. So we've got a fantastic stochastic signal here. This candlestick says it all. It's closed above the last 1, 2, 3, 4, 5, 6, 7 candlesticks. So you would obviously want to place a buy trade at that point. So if you were to buy at the close of this candle here, then whenever you trade, if you consider this to be A and then B, and then obviously we're looking for C here, so we've identified our C points of trade. But your first target is to trade up to the top of B. So we could put our blue line at the top there. Okay, so we've identified an entry point, we've got a target to trade towards. Now we can put our stop loss. So one of the methods that you can use for the stop loss is just what I've taught some of you guys on the course. Using the Fibonacci, we've just got a level 1.12, and you can just bring that around to the C point, and you can pop your stop loss underneath like that. So that's all well and good. The only thing that you'll see is it doesn't really give us a very good risk to reward ratio. It's virtually a 1-to-1. It's virtually a 1-to-1 risk reward, or a 1 to 1.1. So what is a good idea to do is just, obviously you've had this big move up on the daily, but look down on the smaller time frames, like the 4-hourly and even the 1-hourly. And this is what it looks like on the 1-hourly, and this is what it looks like on the 4-hourly. So you can see at this point, the stochastic is very overbought. And also you see it even clearer on the 1 hour, that the price has zoomed up like this, and then the stochastic is gone into the overbought section, but it's actually breaking down now through the 80 again. And the MACD is also giving us a sell signal. So it's very likely that we're in a retracement now on the 1 hour or the 4 hour. So it's obviously just looking to retrace now and then go up again. So if we're, for example, on this 1 hour chart, and we can see we've had A, B, because we've made a higher high, then we can draw a fib from A to B on the 1 hour. I don't want you to get confused. I'm just going to delete the initial Fibonacci here, or this big one. Okay, so back to the 1 hour, and then so this becomes now our A, this becomes our B. In fact, I'm going to make it small just so that you can see that it's on the 1 hour chart. And then, we can do exactly the same as we teach you on the course. We can find a zone between 50 to 61.8, where we can zoom out and do all the things that we teach you. I don't want to take up too much time on this video. And we can put a buy zone there. So what we're waiting for is we're waiting for the price to come down and retrace into our buy zone. We're waiting for the stochastic to come down like so, at the same time as it's in your buy zone, and then wait for signals. So wait for all the signals that we teach you. Look for another candlestick popping up. Okay, look for the stochastic to pop out of the 20 and cross over to the red. And if we get that, say for example, we get a nice candlestick, we can actually enter the trades at that point. And guys, don't get confused. Although I'm doing this on the 1 hourly, it's actually still a daily trade. So if you go back to the daily, then you can see this is what I'm looking at. I'm just getting an early entry on a retracement here. Let's delete this. Sorry guys. I'm just getting an early retracement. So I'm doing an A, B, C on a daily, looking to trade up to the B. But if you remember, when I did it initially, if you're entering in at just looking at the daily chart, it's going to give you a 1-to-1 risk-reward ratio. But if you're able to wait for the retracement on the 1 hour or the 4 hour, and then you get that little retracement and you identify an entry in, then you can basically get into the trade a lot quicker. So in other words, a lot lower. So you'll get a better risk to reward. So if I go back to the daily now, and we look at our risk to reward, we've got a 1 to 1.9, which is virtually a 1 to 2, which is what we're after. So guys, I hope that helps. Obviously, if you go to the next target, if we're looking on the daily, just delete this Fibonacci quickly. We take it a next step and we go, and we actually take that trade up to 4. So looking at obviously at the previous support and resistance level, but maybe we trade it up to the Fibonacci 23.6. We're going to make a 3.1 to 1. But that's if you get in early. If you don't get in early, if you just get in on the daily, and then it's only a 1.8. So the difference between getting in on the daily and just finding an earlier entry point is really, you're really going to make much more money if you're able to get to that. Obviously, it takes time, it takes practicing, it takes looking at the charts and staring and stuff. But hopefully for some of you more advanced guys, you'll be able to have a crack at that. Let me know if you get stuck. Let me know if you need any help with anything. Pop onto the chat room, send us an email, phone in, come in. We're here to help. Thanks, guys.